All right, what's going on, everybody? Chris Franks with Texas West Capital coming at y'all live here. Just a few minutes after 11 a.m. Central Standard Time on Friday, the 19th of April, 2024, also this year, known as Bitcoin Halving Day. I guess we'll be there probably in the next 9 or 10 hours, last thing I looked at. So hopefully you guys have survived all well. We had a bit of a little shakeout last night that I think kind of freaked some people out. But we got like $100, not even $100 drop below the swing low, and then just started rocketing after that. Overnight, 10 hours, we did something like a $5,800, $6,000 rally. So hopefully you guys didn't get too emotional, didn't get too freaked out about all that with the what's going on with Iran and Israel. Man, oh man. So we've got a guest today. We've got Juan Leon. He is the senior crypto research analyst over there at Bitwise. Bitwise, you guys, I don't know if you know, I've got a great, I've got a lot of respect for them. I was looking for a different word, couldn't quite come up with it. But anyway, and so, I really appreciate a lot of what they're doing. And we were able to have Juan with us on Spaces with myself and Gary Cardone there earlier this week. To speak a little bit about their Q1 crypto market report. And so I've got him here today to join us. There he is. What's going on, Juan?
Hey, Christopher. Good to see you.
Yeah, man. Great to see you. We've only talked via Spaces and of course Twitter there. So it's good to see you and kind of put a real live face to this. So man, oh man. So you guys put together this great report on Q1 on the crypto market there. And a lot of really bullshit. I don't think people, if we're in the markets and we're kind of going day to day and trading and, not and even investing and whatnot, I don't think we really pay attention to like the cumulative of what happens over a specific time period. And you guys did a great job of putting that all together. And I'll tell you what, reading through it, man, it's hard not to be really just incredibly bullish. So, man, I'd love for you to kind of take us through it there a bit and then maybe talk about halving since we're going through that here and, kind of work with that. What do you think?
Yeah, absolutely. Let's get into all that fun stuff. Yeah, I think for people who are kind of stuck in the day-to-day tracking the market, lately the last couple of weeks haven't been as exciting. Bitcoin's kind of been stuck in this 60, 70 trading range. But if you take a step back, what has happened this year has been really momentous. Bitcoin started the year around 40K, 42K, and then mid-March, rose all the way to break new all-time highs above 73,000. Now, it's retraced a bit. But what has led to that strong momentum throughout the year is really what has transpired so far. In Q1, we had so many positive things for the ecosystem. We had, first and foremost, what I call the Bitcoin's IPO moment with the launch of the Bitcoin ETFs. Because this really has brought Bitcoin to an institutional level for the first time ever. Really, if you think about the history of Bitcoin up until this moment, it's largely been a retail-driven phenomenon. Really big institutions, big money managers, pensions, endowments have really not been able to get involved up until this year here in the U.S., which obviously is the biggest financial hub in the world, because for compliance reasons and fiduciary reasons, big institutional investors that manage capital for individuals are not going to be investing in Bitcoin by themselves and custodying and doing all of those things. So the ETF vehicle really gives them the stamp of approval from the SEC, the fiduciary backing that they need to be able to invest in Bitcoin and in the crypto asset class. And so the ETFs got off with a bang. They started in January. The expectations from us and other people in the industry prior to the launch was that these ETFs in the first year could see $2 to $5 billion in inflows. And thus far, in the first 3 months since launch, they've already had more than 12 billion in inflows. So they've completely surpassed expectations, which is incredible. That's that new demand, in the first quarter of the year, Bitcoin ETFs bought 3 times the new Bitcoin produced by the network. So the demand is overwhelming the supply, and that's a big part of the reason why the price has gone up and hit new all-time highs. Now, stepping back from that, that's all great for Bitcoin. It's very positive momentum, but there's also so much more that happened in the first quarter for the entire ecosystem. You saw a trading volume on centralized exchanges surge 80% over the quarter because of new trading activity from new people coming into the market. CME Bitcoin futures open interest hit an all-time high of 7 billion. That shows you increased interest from institutional investors. And then you had other areas of the ecosystem that also thrived outside of Bitcoin. In Ethereum, there was the Denken upgrade that happened in March, which helps reduce the fees on layer 2s on top of Ethereum. It brings them down from dollars to pennies, which is orders of magnitude, and will really spur a lot more consumer adoption because now fees are negligible to transact. So that happened, and that helped Ethereum see its daily active users hit all-time highs in Q1 as well. And there was a resurgence in DeFi activity as well. The staking, lending, trading applications all rose significantly. Uniswap, the largest decentralized exchange, for example, jumped 50% in the quarter to 185 billion in revenues. Stablecoins continue to see adoption. Their market cap is now over 150 billion. And all told, the DeFi sector as a whole grew 70% over the quarter. And then, of course, another incredible thing driving the ecosystem is institutional adoption, which is really important. We're now, with, as I was mentioning, with the Bitcoin ETFs, we're now transitioning from just retail adoption to institutional adoption. And on that front, there were some big developments this past quarter. One of the bigger announcements was BlackRock introducing their first tokenized fund, where they leveraged the Ethereum blockchain to offer a new coin that is backed by treasuries to get dollar yields. And then you had other initiatives, really important initiatives as well. Deutsche Börse, one of the largest exchanges in Europe, they launched a regulated crypto trading platform for institutional clients. HSBC, one of the largest banks in Asia, issued their first real-world asset as well, tokenizing a gold investment product, so a crypto token to track the price of gold.
Don't tell Peter Schiff.
I know, right? He's going to have a heart attack if he hears that. And Citibank collaborated with the Avalanche blockchain to tokenize private equity funds in partnership with WisdomTree and Wellington Management. So you just had a host of really incredible activity throughout the crypto ecosystem that just shows you that there's so much resilience, and it's happening within Bitcoin, but also outside of Bitcoin and the rest of the ecosystem. So it's really a rising tide for everyone at this moment.
Yeah, and I think, hey, listen, guys, if you want to check it out, by the way, I've got the link underneath here, and I'm going to say it before I forget it later because, I'm terrible at interviews, but make sure you're following Juan there on X, Singularity7X. I've got the link there as well underneath the video. But yeah, so, diving in there, I think the best thing, especially people that are maybe new to trading or especially new to crypto markets, is that you guys give a lot of information about not just what happened this Q1, but how it relates to what's happened in previous cycles and whatnot. So you can look, in here, it shows how Bitcoin has performed prior to the halving and then after the halving, excuse me, for each time coming up. It shows miners and how they generally tend to react and, act there, coming up to the halving and then afterward. And so, again, guys, it's free information, guys. Jump there and read it because there's so much great stuff in there. But let me see here. I think one of the best things I don't think that we really appreciate, not just in crypto, but especially with Bitcoin itself, is this. If we look back to 2011 and you guys show a great chart in there where you're showing how the different asset classes have performed each year. And for those who don't know, Bitcoin has been at the top, the best performing asset So I guess it's probably about 14 years now, 13 years, I guess, coming out. It's been the best performing asset in all years other than 2014, 18, and 22. And so basically, again, guys, I tell you all the time, even if you're trading, you should just have a bag of Bitcoin that you don't touch. Don't go into it after you trade away your money. Go, oh, well, I've got some over here I can trade. Keep it, because what this is showing you is that Bitcoin is the alpha asset, basically. I mean, if you buy that and hold that, it's shown historically since its beginning here to really just pay off. So we look at this here now, and we see kind of where we are, having hit the all-time high prior to Halving, which we've never done before. Do you think this is going to be an impediment upon the potential price, the potential top of the price here rally during this cycle, or do you think it's just one of those things that because we've got that institutional kind of investment in there now, that there's a good chance that we may actually see this thing kind of continuing on further?
Yeah, that's a great question. And I am definitely on the camp that there is, for a couple of reasons, I think we should be constructive on what's coming next after the halving. I mean, historically already, the precedent has been that Bitcoin performs better in the year after the halving than the year before. And so that's already the historical precedent. But looking at what is happening right now to try to gauge what's going to happen this time, I think something that most people are not discussing all too much, but I think is really important, is what the changing ratio of what I call forced versus willing sellers in the market, and how that's changing the dynamic and going to impact post halving. So if you think about, there's two types of sellers in any market, which are forced sellers and willing sellers. So a forced seller is someone that, for example, if you lost your job and you had to sell your home to raise cash, you'd be hard pressed, and you'd have to sell it probably for less than you would want to otherwise, right? You'd have to sell it at a lower price if you really needed the cash. Now, in Bitcoin, the bulk of forced sellers are the miners. They have significant costs from their mining operations, electricity costs. So they need to recoup costs, and so they're forced to sell a lot of their Bitcoin, the Bitcoin they generate, to cover expenses. Then those are the forced sellers in the market. Now then there's the willing sellers, which are people like you and me who hold Bitcoin and who will sell it at a price that we think is fair. And for many of us are long-term holders, so we will continue to hold to much higher prices. Now, why does this matter? Well, as we were talking about earlier, the demand from Bitcoin ETFs is really overwhelming the supply of new Bitcoin. And so, for instance, let's imagine that investors in the Bitcoin market wanted to buy on average $1,000 Bitcoin per day, 1,000 Bitcoin per day. Currently, miners are producing 900 Bitcoin per day. That's what the network is producing from the current issuance. So that means that currently, before the halving, investors can acquire 90% of that Bitcoin from forced sellers, and then the other 10% they'd have to acquire from willing sellers, because 90% is being produced and sold by the miners. Now, after the halving, when that new supply is cut in half, that means that miners will only produce 450 Bitcoin per day. So at that same level of 1,000 Bitcoin demand, now you'd have to acquire 45% of the Bitcoin demand from forced sellers, and now a larger percentage, 55%, from willing sellers. And so why does that matter? Well, because the demand is continuing to increase from institutional investors, that means that post-halving, you'll have to acquire Bitcoin, and it'll likely be a scenario where the demand is chasing a supply that is unwilling to sell unless the price is much, much higher, because it's a higher ratio of willing sellers versus forced sellers. And so I think that dynamic is really important for people to recognize, because the demand is strong. We've seen strong demand already from institutional investors through the Bitcoin ETFs, and that's been the early movers. It's been the independent RIAs, it's been hedge funds, it's been also retail investors, but you don't yet have pension funds investing, endowments investing, the large wirehouses, the UBSs, the Morgan Stanleys, the Wells Fargos of the world. But we're talking to all of those institutions, and they're all going through their due diligence processes, which are long and complex and take months. But they're all wanting to get involved, and so in the next 6 to 12 months, we'll start to see those types of institutions come online, and the cumulative of those institutions, they control $60 trillion of wealth. And so that is a large amount of capital. Obviously, we're not saying $60 trillion are going to come into the market, but you have, many of these, the shift we're seeing with RIAs is from before the Bitcoin ETFs, people, they were investing selectively for clients in their book. And now we're starting to see more of a trend towards discussing a 1% allocation across their book. So you think about 1% allocation across these very big institutional players, Morgan Stanley, Wells Fargo, those kinds of players, and you have a lot more demand coming into the market.
Yeah,
when
so
supply is going down.
Yeah, so I guess you're of that same belief then. Kind of Gary and I have been talking about this a lot over the last few months, and how the likelihood is that we're going to see increased access to these Bitcoin ETFs through the larger, much more professional RAs and whatnot. As the year kind of goes on through there, kind of like as you get through summer into Q4. Is that what you guys are thinking is probably going to be coming on as well? I mean, I know you guys are out there on the road like all the time, talking to so many.
Yeah.
So what are you guys seeing?
Yeah, we have a full distribution team that is on the ground meeting with people every day. And we're in talks with all of these big wirehouses, and they're all interested and they're all going through the due diligence process. So we do think in the second half of the year we'll start seeing institutions, these big institutions start coming online. Not all of them are going to come at once, but I think it will be kind of a domino effect where the first one, you hear, say it's Morgan Stanley, and then Wells Fargo clients are going to be like, well, why can Morgan Stanley clients get access and we can't? And that'll help put more pressure. So I think it's going to create a domino effect as well.
Yeah, and speaking of the ETF buyers that are coming in, so another thing that we had talked about, Gary and myself, and trying to kind of push out there is this idea that the specific type of ETF buyers that will be coming in are more of the buy and hold for a longer period of time. They're not going to jump in and out on geopolitical events and stuff like that. And I say that because I saw that Hunter there from Bitwise just posted yesterday, I guess, posted a tweet there that said, "I don't buy it that buy and hold Bitcoin investors are sellers on heightened geopolitical conflict. We spend all day, every day with long-only investment professionals, not seeing redemptions on these developments and not hearing this thought." So it seems like that you guys are kind of seeing the same thing that we were thinking as far as what's coming in there. And of course, the potential for that, I think, is maybe even really difficult to kind of understand, right? Because you have people like Kathy Woods, who's been talking about, $1 million Bitcoin. Now she's talking $1.5 million Bitcoin, not tomorrow, but coming up here. And I think even if we were to get to that point, I think that would have to be the driver of it. You've got to have those folks that are in there that are holding, they've got a 5-year, 10-year kind of time frame that they're looking at. So I like that you guys are kind of up there kind of putting, we've been saying this for a while. It's nice to see that the professionals are coming up here saying, yeah, that's kind of what we're seeing as well. But I assume, or I think I would have to assume that right now, or maybe you can correct me on this, the ETF buyers that are coming in now, are they of that type, or is that type kind of coming, or are they maybe leaning more toward because it is it hasn't really expanded beyond the real big players? Is it maybe those that are more individuals kind of going to jump in and out?
No, yeah, to your point, many of the, I mean, we work with primarily institutional investors and financial advisors, and those types of investors are long-term oriented. You know, they're building wealth, they're managing wealth for the long term for their clients to build wealth over the long term and generational wealth. So they're not, you know, day traders or month to month traders. They're setting these allocations, you know, stocks, bonds, now Bitcoin, for time horizons that are typically in at least in over 1 year, but most of these investors target allocations over a 3-year time horizon, which is what we talk to clients all the time. You know, if we actually have in our Q1 report too, for people to check it out, we have studies where we've done a 3-year rolling analysis of putting a small allocation of Bitcoin in a 60/40 portfolio, and over a 3-year over horizons of 3 or longer years, the contribution of Bitcoin has always been positive to a portfolio, even with its large drawdowns and volatility. So what's really important, I think, for investors is to size. You know, Bitcoin is a high growth asset, but it's a very volatile asset. And so the way to implement that effectively in a portfolio is to size it appropriately. So, you know, a small allocation, 1, 2, 3, 5%, and then to rebalance it with the rest of the portfolio on a quarterly basis, for example, is a good practice. And with that, that allows you to harvest the returns and the volatility in a way that mitigates the downside to the portfolio, and really helps the upside of Bitcoin contribute to a portfolio. So what we've shown in our studies is that over longer periods of time, when you put Bitcoin in a portfolio, you end up meaningfully increasing the return of the portfolio without having a big impact on the drawdown or the volatility of the portfolio. So the Sharpe ratio of your portfolio really increases by a material amount. And so it's a really powerful Bitcoin is a really powerful addition to portfolios, and that's what we. And so going back to the ETFs, the independent RIAs, you know, financial advisors, the wirehouses that are going to be coming in, they're getting into Bitcoin at these prices, right? You know, the wirehouses, when they come in, whenever they come in later, the price, if the price stays here or goes higher, they're going to be getting in at 60, 70, $80,000, and they're in it for a 3-year horizon. So they're not going to be, you know, selling if something else happens with Iran and the price drops 10%. They're longer term holders, and they've established their base price at these levels.
Yeah, I love that. I love that. Tillman here was had a comment here. Let me see. Where he says all of the mining industry has been consolidated to the point that they can borrow fiat to pay bills. So with that in mind, I know you mentioned earlier about you know, willing and forced sellers. You know, I've been a big proponent of, listen, folks. You know, there are sellers at all prices, guys. You know, whatever it is, you know, even with the willing sellers, you know, just because you may think, okay, 300,000, doesn't mean the guy next to you isn't thinking, hey, you know, listen, give me 76 and I'm feeling pretty good, you know.
Yeah.
So I think that's interesting what Tillman's saying there about the ability to basically borrow fiat to pay their bills. So they're maybe not as forced as they used to be, which I think ends up being maybe a really bullish thing for Bitcoin price, especially as we get into halving later today, where we go from 900 newly created to, you know, half of that 450. And if sellers then are holding more of what they have instead of having to be forced to sell it, and we're really kind of relying on the willing sellers who are maybe hopefully listening to us and being convinced they need to hold on longer. Overall, I mean, I think maybe that is probably a pretty bullish catalyst for price here, as you know, as the year continues on.
Yeah, I think that's certainly, we've seen miners take on debt, and that allows them to pay for their expenses without having to sell Bitcoin. They're also stashing quite a significant amount of Bitcoin on their balance sheets that they could sell if they needed to. But that's a very good point. They can use debt as a means to pay for expenses, and that is bullish for Bitcoin because there's less sellers. Yeah, certainly that's the case. I think, on the topic of miners, I think there's been a lot of concerns from investors because mining stocks have underperformed year to date. They're underperforming Bitcoin. But really, if you look at the historical record, that is par for the course. They tend, in past halvings, they have always underperformed leading up to the halving and then outperformed. Now, why haven't they outperformed afterwards? Because the price of Bitcoin has gone up, because they've adopted more efficient mining rigs and optimized their fleet. And both of those things I think are likely to happen again. There's new more efficient mining rigs that are coming onto market that many of them have already placed orders for, so they're going to be upgrading their fleet. And then the price of Bitcoin, I think what we've been talking about is that we see a very constructive picture throughout the rest of the year and into 2025. And so I think that bodes very well for these miners. They're also very well positioned for any interim. Bitcoin and crypto never go straight up. It's a volatile asset class. We all know that. So when there is volatility, they're very well positioned. They've been actually deleveraging quite a bit going into this halving. So their balance sheets are strong. They have liquidity. They have a lot of Bitcoin that they can recur to if they need to. And so most of the large miners are in very, very good positions heading into this halving. And I think the market hasn't recognized that. So I think there's great opportunities within the mining stocks going forward.
All right, so let me kind of put you on the spot here. As far as miners go, are there any that you're more interested in than the others? Are there any that are really kind of sticking out to you as looking pretty good, based upon their balance sheets and the Bitcoin that they're mining and whatnot?
Yeah, I'm friends with all the miners, so I don't like to pick favorite kids. But I think CleanSpark has done a really fantastic job of executing and growing. They've really ramped up from being one of the smaller miners to now becoming one of the largest miners. So their execution has been flawless. The team at TerraWolf is doing a really good job at vertically integrating and keeping their costs really low. They have one of the lowest costs and one of the highest margins in the industry. So they're doing a really, really great job. Iris Mining is another company that is executing really well. Those are some that I would call out. But I think in general, most of the larger publicly traded miners are all doing a great job. Riot continues to execute very well. Marathon, outside of just the mining, they've come out with a layer 2 solution to help optimize transactions and create a new revenue stream that way. So we're seeing innovation as well, and I think that's great for the miners.
Yeah, I've got a question here. Martin's asking, why would it be better to invest in a miner than invest in a Bitcoin ETF? I don't know that I necessarily think it would be better, but what are your thoughts on that?
Yeah, that's a great question. There's a couple. The way to look at this is, through a Bitcoin ETF, you get straight exposure to Bitcoin, and that's what you get. And if that's what you want, that's fine. With the Bitcoin miners, I think the way you can look at it is you essentially get leveraged exposure to the price of Bitcoin because of their business model. They have inherent leverage to the price of Bitcoin. And so it's very similar to the dynamic between gold mining stocks and the price of gold. Generally, you see gold mining stocks rise, multiples of the price of gold, or fall multiples of the price of gold because of the inherent leverage from their mining operations, and because they carry debt. So it's a leverage. It's their leveraged investments. Now, great. So if Bitcoin goes up, my mining stock is likely to go up more. Yes, but there's also the business risk, right? They have to execute. There's idiosyncratic company risk. So that is so if you're going to pick a miner, you have to study the fundamentals and do your due diligence to pick the correct ones. But that is a way you can get leverage exposure. Now, if you don't want to take that business risk, the idiosyncratic company risk, then you can just invest in Bitcoin, which is also a great asset. So I think that's the way to look at it.
Great, man. Hey, man, I have loved having you on here, man. I loved hearing the insights. and your thoughts with us. Anything that you want to say there before we kind of move on?
Yeah, two things. First one is that thank you for having me on. It's great to be with you. And actually, I think you also live in Texas, right? I'm based out of San Antonio, so maybe we'll have to meet face to face sometime.
Definitely, yeah. I was just up until just about a year and a half ago. I was living in Bernie, just north of San Antonio there. So yeah, man, I love that you're over there. We'll definitely get together, and then we'll take pictures, and we'll make make everybody else jealous that we got to meet and they didn't.
Yeah, yeah, absolutely. And then the last thing I'll say for the audience is, at Bitwise, we are a crypto focused asset manager, and we've been in the market now for 7 years through bull and bear markets alike, and have helped and continue to help investors navigate the opportunities in crypto. So please check us out, bitwiseinvest.com. You can follow me, Singularity7x, on Twitter. We do a lot of we provide investment solutions such as the recently launched Bitcoin ETF, BitB, which has become one of the top Bitcoin ETFs. But we have many other investment solutions, and we also provide a lot of great free education for resources for individuals and institutions. We do webinars, we do these reports, we write white papers. Just published one on the Bitcoin halving. So please check us out. And reach out to us if you have questions or want to get involved in the crypto ecosystem. We'd love to help you.
Absolutely fantastic. Thank you so much for being a part of this, Juan. I really appreciate it, and for being earlier this week on Spaces with Gary and myself. That's a little more wild over there, a lot less structured. But yeah, a lot of great stuff. And guys, like he said, follow him, Singularity7x there on Twitter. Follow Bitwise. What was the .com again?
Bitwise Investments.com. Yeah.
BitwiseInvestors.com. Okay. Or they can also follow Bitwise Invest on Twitter. There, right? Yeah. All right. Great. Fantastic. Thank you so much, Juan. Appreciate it, man. We'll have to have you back sometime. Okay.
Yeah, that'd be great. Thank you, Christopher.
Fantastic. All right. Take care.
Take care.
All right, guys. Hopefully you enjoyed that, man. That was a lot of really great information. I'm going to tell you one more time, guys. Check out underneath the video. There's a link there to the Q1 report, so you guys can jump in there and see that. And you can read about all this information he was sharing, and more. There's so much, guys. There's just so much information in there, and it really kind of allows you to step back and get out of. Because I know, if you're sitting there on Twitter, if you're sitting on social media, you're going to have this moment to moment emotional up and down thing, right? Because everybody's posting everything online there, and you kind of get caught up in that, especially if you're trading. But it's always good to kind of step back and kind of look at, okay, here's where we were, here's where we're going. Here's what's happened along the way, and that'll really, I think, help you out a lot when you're doing your trading, when you're trying to figure out what is the market doing. And what I mean about that is, let's kind of jump in here to the Bitcoin chart here. Let me kind of get this screen here a little bit better. There we go. And so if we're looking at Bitcoin here, again, there's been so much doom and gloom and this and that about Bitcoin, but what's really happened? We've been range bound. We've been range bound for a month here. That's it. And what do we have? We had a dip, and we had this dip. And this dip yesterday was like, a $78 dip below, and then immediately followed almost a $6,000 rally. I mean, if you listen to social media and whatnot, it's like, it's like it's the end of the world, right? And it gets you to feel that way, because remember, at the end of the day, guys, remember this. All you're seeing here, this price action, is a visual representation of emotion, of human emotion. It's this battle between fear and greed in the aggregate, right? It's the entire market. It's what they're feeling. And so, it's an emotional play. And if you understand that, and you understand your own emotions, you can get in there, then all of a sudden you're not freaking out it's going down here, because you're like, well, listen, we're just range bound. We haven't even done anything. Here's the main low here, this 59, depending on what chart you're on, around 59,000, 59,200. That's what you're watching. And what do you need? You need an impulsive drop and close below it, and then follow through lower. Here's what I always say, guys. Listen, for me to be thinking we're really going to head down lower here, what I would need to see is a breakdown below, a rally back up, a rejection, and then a breakdown below that first breakdown. A breakdown below, here's the thing, you guys try and trade the breakdowns like right here, and you get caught. You get caught. You need confirmation. All right. Now, what does that mean? Well, sometimes, price is just going to dip on down and you're going to, it is what it is, guys. Sometimes you're not going to get the chance to get the confirmation. But if you look at trading as a series of trades, right? Not as the individual trade itself, but as the series of trades that you're doing, then what you're interested in is what is going to happen over time, right? And if you are, and what happens over time is most of the time you're going to get the breakdown or the breakout, the pullback, and then the breakdown or breakout further, right? You're going to get that confirmation. More than half the time, that's what you're going to get. So you go, okay, well, sometimes I'm going to miss the straight breakout. Well, I need to learn how to trade those, get into trends that are established and going. But if you want to be successful over time, guys, wait for the breakdown or breakout, the retest, the pullback, and then the confirmation push down or push up through it. If you can do that, it's going to help your trading so much. Oh, and it's not anything special else that you're doing here, other than you just have to get through your emotional, oh my God, if I miss it, it's the end of the world kind of thing, right? Bamboo says Twitter is not emotion, it's absolute hysteria. I know 5-year-olds who are more mature than the folks on Twitter. Twitter can be a tough place, guys. It really can. But you need to recognize, especially if you're trading, right? How wide or narrow are your stops here, Mr. Smith wants to know? Well, it depends on where you get in, right? So I'm in from lower, right? I haven't had a reason to get out. There's nothing has happened here that has said I need to get out of my long position. Okay. If you were to get in, let's say this low right here, then what you're going to want to do, the way I would approach it is you put your stop loss right below this low, because I think what would happen is we would get a breakdown, like a sweep of 59 and then back up. But that's just what I think would happen. It doesn't mean it has to happen. And if it doesn't happen, there's a good chance you could see it getting down here to 51, 52. Okay. And so you want to, but this also means you have to understand proper risk management, guys. Which I think a lot of traders out there don't, right? So if you're using proper risk management the way we teach it, and you put your stop loss right below here and it comes back against you, you're going to lose 1% of your portfolio. That's it, 1%. So if you've got a $10,000 portfolio, you're going to lose $100. That's it. That's how we do risk management. Okay, because it's about consistently locking in profits and allowing time and compounding to do the work. Time and compounding are the magic when you're trading, guys. Okay. And so if that's the case, then all you have to do is focus on consistently locking in profits and making sure that you get out without losing your butt. The problem is you guys, you'll go long here with everything you have and heaven forbid, throw in leverage. And the minute you drop below your entry, you drop like 10% below your entry and you're down like 50%. Okay. And you don't want to put yourself through that. I'm telling you guys, listen, we've got links underneath the video, guys, for our group coaching. I'm telling you right now, if you don't understand what I'm talking about at the moment, or you don't know how to do it yourself, at least jump in the 3-month, get in there and put your nose to the grindstone, and I will help you as much as you're willing to work. I can't do it for you, but I'll be damned if I'll let you get out of there without learning more than you're going to learn what you've learned over the last year or two, even. And it's simple 3 months, because we approach it with this idea of, listen, here is how and why the market really moves the way it does. Here's proper risk management. And then here's the tools and how to use them. And then we start putting all that together for you. And that's what we do. Because it's not, I'm not interested in you coming in and spending money and then not doing anything, leaving and being like, oh, well, I didn't learn anything, waste of money. It doesn't do anything for me. It doesn't, right? But if you're serious about it, join us in one of the links below, guys. And we will get you, I'm telling you, I say it up here, but look at all the comments I posted from students that we have, and you'll see, I'll go out of my way to help you. It's not just simply you jump in there in the group coaching and that's it. Now we do have our C3 membership, which is more of a do-it-yourself, where you get one training a month. But the group coaching, you get 3 a week, every weekend there, and a few other things as well. So like Mark's saying, here's Mark, look at that. Best choice of my life. And he's Canadian. That's saying something, right? What if you take good setups, but your first several trades are losses, even at 1%? If you have several losses in a row, those next wins have to be much bigger. No, they don't have to be much bigger. See, that's the misthought. It's not about the single trade. It's about your performance over time. Okay. So kind of like what Juan was talking about when you're looking at Bitcoin, right? Or you're looking at miners, right? And you've got the ups and the downs, but what is it doing over time? That's what you're interested in. You're going to get on streaks, guys, where you're going to lose multiple trades in a row. There's no way around that. It happens. But if you're only losing 1% at that point, and you even lose 5 trades in a row, that's like, well, it's going to be less than 5% where you start, because it's 1% from your balance to begin with. And then you have 99% left, right? And then it's 1% of the 99%, right, that you had left. So, but, you lose 10 in a row, it's still only 10%. You guys are losing often well more than 20, 30% in one trade. One trade, you see? But it's about understanding the process. If you guys, whether you do it the way I do it or the way somebody else does, focus on the process and not the single trade, okay? Don't focus on your dollar amount you're going to make from the trade. Focus on your return on risk. If you risk 1% and your trade returns 5%, you just returned 5 times your risk. That's crazy. It doesn't matter if you go, oh, but my account's so low, so it was only $30. It's not about $30. It's about you returned 5 times what you were risking. That's the important thing. And so if you start focusing on that and focusing on the system, right? The process, your results are going to come. Your results are going to come. Okay. But if you're focusing on the dollar amount all the time, if every trade is its own trade to you, if every trade is on its own and it's not part of this system of how you trade, it's just, oh, there's one trade here and this, and you're focusing on dollar amount, the odds are you're mostly going to lose money. Okay. So, I mean, I'm just, this is the kind of the reality of when you're trading, and the thing that a lot of people don't talk about. But, I'm here, whether you join us or not, guys. If you're here and you're listening, I'm going to give you honest to God information here. I'm going to give you whatever I can to help you, right? In terms of what I'm speaking about, because I want you to be successful. I think what we do is absolutely fantastic. I think it's the best thing out there, honestly. I really do. If I didn't, I would just trade and not worry about it, right? But I'm trying to build something here to help people. At the same time, I'm an entrepreneur, so you want to build something, right? But even if you're not with us, I hope you're listening and taking into account what I'm talking about here, these things I say, because they are often the things that matter most. Okay. Let me see here. Do you find that having tighter stops is more difficult in crypto since there's such volatility and price swinging? Well, I usually don't have tight stops. But the stop itself is always based on the setup. I would never go in there and say, oh, your stop loss should always be 5% below where you're at. Your stop loss is always based on the setup. And so again, with us at TWC, we teach you Wyckoff, we teach you price action and volume. We teach you Elliott wave. And so depending on how you're looking at it, you've got clear validation and invalidation levels. And once it hits that, if it hits the invalidation level, get the hell out. Don't sit here and hope that it goes. Maybe it does. Maybe it just dips a little bit further and goes up. But most of the time when you're sitting there hoping that it's going to just dip and come on back up, it doesn't. And it goes down a lot further, a lot faster. And you get caught in this emotional straitjacket, basically. You can't get yourself to get out because then you start thinking, oh crap, I should have gotten out. Now I can't get out because I'm losing so much more than I would have if I got out where I was going to. And so you keep holding on, it goes down further, and that just kind of continues to build on itself. And it makes it very difficult for you to actually exit the position. It's an emotional thing that happens, and you become very, very stuck. Okay. So you just want to be careful with that. Let me see here. Quick email needed. Says, remember me since back in 2017, Texas West Capital? Quick email needed. Sounds vaguely familiar. I'll be honest with you. 2017 was a long, long time ago, but good to see you. Do you think we're going to drop on the halving? You mean like when halving happens? No. I mean, here's the thing, guys. At this structure right here, I think there's a good chance we're probably done. I think there's a good chance. But here's the thing. We've got to break out at least above this. What I've got here is wave 4, which is actually at the EQ of this range. On this chart, it's 66,903 and 88 cents. We can break out above that. The odds increase significantly that we're going to break out. New all-time highs, okay? Beyond that, wave B up here at 72, 756 and 63 cents. That's the one we need based on this structure, this ABC here, this flat correction. Based on that, we need to break out. Only breaking out above wave B will say, okay, the pattern is done. So the earliest, if you're not already in here, you may want to do, on this bigger time frame here, is waiting for that breakout above the 66,903 area. That would be the earliest that maybe you'd want to look to get in based on the daily structure here. But until you get out above wave B here, it could still, morph into further downside with it potentially. Okay. Let me see here. So yeah, I mean, for me personally, I don't think it's going to drop. I think the low is in. I mean, this is huge right here, guys. Let me zoom in here a bit real quick. Look at this. It's 1 hour, right? You have this on this chart here. This swing low was 59,707 and 58 cents. This one is 59,640, right? So you're talking about, in this case, $67 lower. That's it. Look at that 1 hour hammer candle. And if you were in TWC when this happened, my man Andrew, you'll see him in there, guys. If you're not in there and you join, you'll see him. He's always keeping you guys up to date on so many charts. He's really done so well since he joined us. But he was mentioning that when it happened, giving some breakdowns on what he was looking at. And I mean, again, the rally off that swing low, guys, 10, 11 hours here, after dipping just 60, 70 bucks below, rallied up almost $5,850, almost 10%. I mean, that's quite impulsive there. If we're looking at this as basically an inline diagonal here, we broke out through the wedge resistance here on large candle spread, bit of a spike of volume there. Here we come pulling back. We'll see what happens here, right? If we don't hold here, the odds are we're going to come on down to this, at least to this 62.1 to 62.4 kind of area here. And, this may or may not be a wedge in here. It looks decently here. It's working like it is, but we'll see. But if you can get a rally up off here, all of a sudden things start looking pretty positive, right? Your 4 hour, we are bullish on RSI above neutral. We're above the SMA. Stoke RSI is bullish and overbought. But it really gets interesting when you get to that daily. That daily is looking really good. You can see here again, we opened up here, wick down all the way back up, and now we're breaking, trying to, continue to rally back up above this local resistance support level right here. So we have this resistance or support here into this resistance. That's where we're trying to break out through one more time there. So I think it's looking really good right now, but until we get those confirmations based on the pattern, we got to wait and see. But, and if it does break down, again, nothing's changed yet. I think if we break down below 59 here, I think there's a good chance it might just be a sweep of it. Maybe getting down to about, basically the ascending channel resistance here, depending on what chart you're on. It's around 56 or 57,000. And then again, if it continues down through that, then we would look down here around 51, 52,000. So nothing's changed since this range kind of got put together and what I've been talking about. Okay. It just, it's just what we're looking at, right? I mean, I can't say this enough, guys. Your emotion is what's going to do you the worst as a trader. Okay. I'm telling you right now, your emotion, which includes impatience, being impatient, because that means you're not going to wait for the setups to materialize. Here's the thing, guys. Here's the thing. And listen here, okay? You will make more money taking just 4 or 5 or 6 trades in a month that are higher confidence trades, ones that have like, basically say, let's say you got price drops down to the S1 pivot, right? And bounces off there and prints a long lower wick, and you're building and you have bullish divergence and oversold on RSI, and Stochastic RSI is oversold. That thing where you have multiple things happening, multiple bullish things happening at the same conjecture. If you take 4 or 5 of those trades in a month, you are going to be so much further ahead than what you're doing right now, which is jumping in just because there's a chance every time it moves. But the problem is most traders, when they first start out, are very impatient. They want to get rich overnight. They feel like their account is not big enough, that the profits are not meaningful enough. And so they try to force things. They try to get into trades before they really should, right? They have oversized positions. They don't have proper risk management. They're probably using excessive leverage. And all these things are what is making you lose a lot of money, guys. And it's all comes back into this thing that you're being impatient. Okay. But yeah, I mean, seriously, you can, a few trades like that in a month, you can triple, quadruple your account in a year. And you go, oh, but my account's only this small. Well, you know what? Here's the thing. You got to be realist. You're not turning $100 into $1 million in the next week, guys. You're not. Okay. But if you learn to trade properly, you can turn that $100 into $1 million in some years, in a few years. Okay. Because you're consistently not taking the risk that you've been taking. You're taking appropriate risk and you're managing it appropriately. And you're not just jumping in because there's a chance. You're waiting for those higher confidence entries. Okay. And I tell you now, and if you're not on board with what I'm saying, you're probably like, oh, whatever, man. It doesn't make, all I can do is tell you guys from experience and what I've seen through, the thousands and thousands of traders that I've talked to over the last 30 years. Okay. The one thing that we all have in common, if we're still doing this, proper risk management and not swinging for the fences every trade. We're consistently locking in profits and allowing time and compounding to do the magic. Does that make sense, guys? Let me see here. What's going on? Vlad says, I don't want to praise him, but the program promoted by Chris is worth every cent. For me personally, it is an amazing experience of improving the trading ability. Yeah, I appreciate that, man. Vlad, I really do, man. That means a lot because, you trusted in jumping in with us and, it wasn't cheap, right? But here you are doing your thing. And we're not cheap, guys. The group coaching is, at the end of the day, what you're getting is really inexpensive. I should charge a lot more. But, for some people, they go, oh, but there's, it's that much money to do it. And it's worth it, guys. I'm just going to tell you right now, it's really worth it, okay? Vlad also saying, it's not worth any program if you're not prepared to sweat learning and practice. Exactly. I'm telling you guys, don't just jump in and then think, oh, it's going to happen for you. You got to be willing to do the work. I'm not interested in you just putting your money in, guys. I'll tell you right now, if you're not ready to actually focus on it and put in the work that's needed, don't join us. Don't, because you're just going to get a bad taste in your mouth. You're going to feel terrible about it. And that's not what we're after. We're out to help you really kind of learn, right? To do the things, to give you a skill set that you can use for the rest of your life, whether the market is going up or down. no matter what market you want to trade, crypto, stocks, futures, whatever it is, metals, precious metals, whatever. But if you're ready, if you're serious, if you're tired of losing money left and right, and you're tired of not understanding what's going on, and you're tired of being emotional, and you're tired of not knowing what's going on, and you want to understand, join us. We'll be glad to help you out there, okay? Where is Fibbo? Fibbo is not able to be here today. I posted that the other day. He had something come up, a thing that he had to take care of, and so he was not able to be here. So we'll see about if he's got time next week to join us, okay? Were you bullish a week ago when the drop didn't happen? I'm bullish. I've continued to be bullish. Because I've looked at this. This is what I'm looking at, guys. There is nothing bearish about this, okay? I continue to be bullish. And the same thing I've said for a month now is that we are range bound. And if you're not experienced at trading, you shouldn't be trying to trade this because you're going to lose money. That's where retail loses money. They can generally get in on the rallies, but they usually lose that money that the profit they make on those rallies, they usually lose it in the corrections along the way. So yeah, I've been and I remain bullish because this is just a range. You're probably going, oh my God, it's a drop from 73 to 59 and some change. Well, yeah, but it's a range. My position is from down here, right? There's nothing bearish about what's going on. This is just like this. It's just like this. That's all it is. But that's the things, those are the kind of things we teach. And because we teach that, you don't have to be all, scared and emotional, whatever, in the range. That's the goal. Let me see here. Now, if you're trading like on the hourly or something like that, or if you're day trading, well, yeah, you're going to have to, I guess you'll sell this and you'll buy this and you'll sell this. But in terms of Bitcoin itself, this is just a pause, a continuation. There's nothing in this price action and volume right here at the moment suggesting that it has to drop down. Matter of fact, with all this volume showing up here at the lows, on this dip right here and the big wicks you're seeing down here, right below the range low here, and this expansion of volume, that this you see how the volume was up and down all through here, but then when we get down into this area right here, you see how the volume stays straight up here, that it stays elevated. Yeah, that's important. That tells you there's significant demand showing up, and most often this is a bottom signal in a range. Okay. So, yeah, you want to pay attention to that. What's going on there? Let me see here. Let me jump in a few more charts for you guys here before we go off here. Okay. Ethereum. I'm looking at the possibility here that we've got this maybe a 3 and a 4 here on a pullback, about a 50% pullback. We want to see a breakout to confirm this. We want to see a breakout here above 37.29 up here. So it'd be like an A, a B, a C. So breaking out above that should have us heading up here. Minimum 51.44 is the target there for wave 5 of parentheses 3 of circle 3 there. So that's where I'm looking at on Ethereum. Sol, everybody got all worried about Sol. We just dropped back. This is the weekly demand structure here. You can see we hit the EQ of it. By the way, it's another thing you'll learn how to do if you join our group coaching. I'll teach you these things. But anyway, perfect hit at the EQ there, right back up. S1 pivot, descending EQ, kind of doing its business there, holding support, rallying back up. If we get an impulsive breakout above that descending resistance, I think we're good to go then. Again, this R5 pivot, that's based on the weekly. That should be an easy target, 410. Still looking for it to get up there overall. Remember, this is the one that was bullish down here. and remain bullish. Yes, we went sideways. Guess what? I remained bullish because there was no reason not to be. And especially once we popped out of there after this long accumulation here, the longer bit of accumulation, there's no reason not to be, right? So Sol still looking good overall. If you didn't buy here, you may have lost a chance to do it. But again, looking for the impulsive breakout above the descending resistance to kind of get us going further there. Gold, it got rejected up here last week, pulled back. It's trying to rally this week. You can see we're pretty well overbought. Stoke RSI and RSI here. Let me zoom in here to the daily. If we get rejected and we drop down here below, let's see here. Well, this swing low right here at 23.40 and 20 cents. We should be looking at targeting kind of this green box area around 22.40 to 22.70 at least, the initial target. But you can see on the daily here, we're resetting. We're still overbought, resetting here. If we do rally up higher, my next target, let's see here, be about 25, 23, 30 up here. Still looking overall up here, heading up toward $3,000.53, as we've talked about. Seems like forever and a day, right? These are ES. This is the S&P E-minis. We got a great reaction here off the S2 pivot on the daily. Daily RSI has almost reset and oversold. Stoke RSI has bottomed out and oversold. I'm looking for a rally from about this area. If we can get that, that'll get us a target up here at 55.7750. Initial target. Breaking out above 52.85 here, we'll add confidence to the count. We'll add a confidence to the idea that we're heading up to that target area there. All right. Let me see here. Let me see here. Looks like you aren't benefiting when a week ago you said we was going to pump. We was, okay, and we jumped. No, I never said we were going to. I said we may. I said if we break out above that level, then we could look at that happening. See, this is what I mean, guys. See, you get silly people on here that act like idiots. I don't understand. I don't understand this whole idea of trolling. Why would you go out in public and purposely make yourself look stupid in front of everybody? I don't get it. I really don't. You're going to say, listen, I'm going to prove that I don't really listen. And then you do it. And it makes no sense to me. It really makes no sense to me. I've been pretty clear about what I've said. So, you know, if that's what you think you heard, I mean, hey, feel free to unfollow, man. Do what you need to do in life. Good luck with it because, man, you apparently can't seem to listen very well. Okay. I'm pretty clear. I'm good. I'm pretty clear, guys. I never say something is definitely going to do something. I've been doing this publicly here for what now, 7 years? I've never said something is definitely going to be something. I always tell you guys, listen, I think this is what's going to happen. Here's the validation level. Here's the invalidation level. Do it all the time. Nothing changes. So, you know, don't come up here and embarrass yourselves and act the fool, okay? Because it doesn't do anything good for you. I don't care what you say. You're just, especially if that's it. I mean, really? But, yeah, I don't know. You know, I'm old, I guess. I'm going to be 50 this year. To me, I've busted my ass through my life, right? To create the life that I have, right? And I can't understand why people, when they have a choice of doing that or wasting time showing how silly they are online, and they choose that latter. I don't get that. I can't internally understand that, right? So yeah. But anyway, let me see. Troy says, Chris, people troll for attention. Sadly, it is really, yeah. They get enough attention from their parents or throughout their childhood, so they resort to acting out online behind a keyboard. Yeah, and it's sad, you know, and it's unfortunate. And I really feel bad for people like that, honestly, guys. I do, because as long as they continue to live their life that way and they think that's how they have to do it, they'll never actually be happy. And it's sad. It's a sad thing to see that people are at that point. There's nothing you can do to force them to be happy, you know? It's unfortunate. It really is. You haven't been helping. You got mad because I said a flash crash could happen. Okay. Yeah. I get mad online all the time. Let me tell you. Let me see here. Lynn says, exactly. In years I've been following Chris, always presents at least two scenarios up and down. Yeah. And it's not just, hey, it's up or down. It's like, listen, I think this is what's going to do, but we need to see it move through this level to add confidence to the idea it's going to. Unfortunately, you get people like Ray there who think that, you know, things are guaranteed and, you know, that's the way you trade. And that's probably why he doesn't make any money trading. I would venture a guess to say, because again, doing this 30 years, I've never seen anybody make money consistently guaranteeing that anything was going to happen. So, but yeah. But anyway, enough of giving him the attention he wants. We're going to go ahead and ignore him now, right? Let me see here. Okay, so there we are with that. DXY, guys. So again, still kind of looking at this idea. Remember, we had two ideas here. The one has been the, you know, the idea that maybe we've got an A, a B, and then a C as a flat. The other one is possibly maybe that 3 is actually down here, and we have A, B, C, D, E as a triangle for 4, and then 5. And then that would give us likely an A, a B, and we'd work on a C up higher here. So right now we're just waiting to see, do we get the breakout above wave 2 here? And if we do, let's see here. If we do, 108.56 is the 61.8. That would be the first target. 109.94 would be my second target. It could go to 78.6 here at 111.24, but I usually don't look at the 78.6. Most of the time, it's going to get stopped around the 50% or the 70.5. Since the 50% doesn't take us to a new high, if we were to break out, we'll look at the 61.8, the 70.5. And if that were to happen again, we would just say, okay, well, wave 1 down here, wave 2 up here, wave 3 headed lower. Now, obviously, you know, if things continue to break out here, and again, this is what I do, right? This is exactly what I was saying I do. Because if this is the last time you see me, I don't want you thinking this count is all that matters. Because in my head, this isn't all that matters. This is what matters as long as wave 2 holds. If wave 2 doesn't hold, I have to have another plan, right? So the other plan is 1, you know, again, 4 is a triangle, 5 and 1 finishing at the bottom, A, B, C with these targets in mind. If that doesn't play out, I have to have another plan. What's the other plan? Well, the other plan is this is 3 and this is 4 instead of 5 up here, right? It's 3. This is 4. And we have a 5 up here at about 122 or 125.7. So now you have all the information that you need. Now you just have to watch price action and go, okay, and trade with the price action. You know where your validation and invalidation levels are. You know what to look for if something else doesn't happen, right? Or I could just say, listen, here's what's going to happen. And then if it happens, it happens. If it doesn't, it doesn't. And you're screwed, right? This is what people don't understand, right? So yeah. Let me see here. I'm just going to go ahead and take out the troll here because obviously nobody wants to deal with this. So we'll go ahead and get rid of them. Delete their comments. They're gone. All right. That's right. That's what we do. Why? Because we can. We don't have to listen to nonsense. It always gets me that people think that that's worth doing. What a waste of a life. Oh. Anyway, so this is oil here. Oil is interesting, right? So oil, we had the big drop down here. Man, this was such a crazy time because when we were up here at about $50, I was talking about a $3 barrel oil, and people were like, no. We dipped down to like $40 below, negative $40.32 at one point. I mean, it's just absolutely crazy how low that went. Never seen that before. But now the question is, okay, so what's going on here? So we've got the all-time high up here. This is West Texas Intermediate, guys. Crude oil. These are the futures contracts for it. Up here, $147.27 is the all-time high. You can note that our last movement up here back in March of 22, and again here around June of 22 and May of 22, because these are the monthly candles. You see they all found resistance at this same area from back here in April and May 11th, right here, August 13 of 2013 and whatnot. So here we are. And it looks like 1, 2, 3, 4, 1, 2, 3, 4, 5. Looks like 5 down. And this doesn't look like 3 up here. So if I pull this up, this gives us targets if we're going to break out higher. Now, like I said, I don't think this is 1, 2, or ABC up here at 50%. I think it's A, B, and we're working on C. So if we break out higher above $95.03, the 61.8 target is $99.34. The 70.5 target is $105.94. And if we happen to get 78.6, be up there around $112.25. But for me right now, I'm thinking this will be an ABC, and then we'll fall down one more before we actually potentially head up there. This is just such a crazy. I mean, you can't even get on the chart here, right? Because it goes down there so much. But looking for a bit lower down there, if we can get, let's say we hit the 70.5 at 105.94, right? That means I'd be looking at least 51.91 here, potentially closer to this $40, $43, $44 area to finish up before we head up. But that's what I'm thinking we're looking at as far as oil goes right now. Mr. Smith says people buying oil storage rigs and facilities made a killing, I heard, because of the contract requirement to take delivery. Yeah, so that was the thing. If you guys were following me back then, I was telling you, I was like, listen, here was the thing. So in the U.S., you guys know I'm from West Texas, so oil's through my veins, right? But the hub, right, for all here in the U.S., oil is transported by what do you call them? Pipes, right? And so they all kind of flow into Cushing, Oklahoma, and that's kind of like the hub area there, and that's where you have your storage. And before this happened, the storage was full. There was nothing else for lease there. Now, if you do Brent crude oil is basically pulled up from under the ocean there. They're already on tankers. It is what it is. But at the time of this happening, something like 76 or 80% of the world's oil storage was full. And what I said was going to likely happen is you're going to have a few enterprising folks that were going to be able to find oil tankers, and they were going to lease them for about a year, and they were going to take, because they were paying you at $40 at negative $40. They were paying you $40 a barrel to take the oil from them, right? Because like Mr. Smith mentioned, in the U.S., you have to take in the U.S. With West Texas Intermediate crude, you have to take the oil. You can't just take the money. If you do Brent, you can take the oil or you can take the dollar figure, right? But here with WTI, you have to actually take the oil. So they were getting paid to take the oil, right, and put it on tankers and leave it out at sea for 8 months, 12 months, whatever it was, and then bring it back in and sell it when price was back up. I mean, and I said that was at the time. I said that was probably what was going to happen. And like Mr. Smith is saying, man, a few enterprising folks made a killing, absolute killing with that. It was nuts, guys. I mean, I was not in a position to take much advantage of that, unfortunately. But man, oh man, those that were, wow. Let me see here. Let's see. If we get a deflationary bust at some point in the near future, would that cause oil to waterfall like it did in 2020? Man, before, well, see, here was the thing. Again, before this happened, it's never been below zero, right? NYMEX, I think, opened in what, 1982? It's never 83. Yeah. It's never, gotten down there, right? The lowest it's ever gotten was over here at $9 and some change there, right? But now that it's been done, could it? I've been looking at, this is something I've been looking at myself. Could we get one more drop back down in there, right? So like this is a 1 and we get a wave 2, maybe to dip into the negative again. Honestly, I don't know. I'll be honest with you. I don't know. It's crazy. It's crazy to think about because I'm still working through the fact that we did it the first time and we did it so big, right? We did it so big. But I mean, yeah, I think it's possible that we could. It wouldn't be the $40 though. I don't think it would be down that low. I think it'd be, God, I'm going to go on a limb here and say if it did, maybe -10 at some point, maybe. I don't think it does. I don't think it does that quite the extreme. But man, oh man, what that would mean afterward would be crazy, right? Because that would be like a 1 and a 2, and then you have a 3 and a 4 and a 5. Yeah. So yeah. But yeah, so craziness, right? Let's build some tankers. Got $5 to chip in for the big time capital. Yeah. I mean, I think it's definitely possible we could get, $10 to $30 range. I mean, again, if we're looking for this pullback here as an ABC, if it gets up to 107, I mean, we're already there at, at basically $43 there. I would think here's what I would think based on this chart here. I would think that if we were to drop below this swing low here, $33.64, I think $29 or even $24.30 or so would be possible targets if we were to break down below that. But until we do, I think that would hold as that's my initial target. That would hold as support there. Does that make sense? TWT, Texas West Tankers, you guys are killing me. So yeah, that's what I'm kind of looking at there on that. Oh, by the way, with gold here, silver, same idea. Here it again, doing the same kind of thing as gold here. It just kind of pushed up about halfway into it. It's done that a few times. We're really well overbought here. And under the SMA, actually, on the daily for silver, and overbought on RSI. Stoke RSI is broken down out of overbought. So again, looking for a potential pullback. Initially, this 2650 area, but could potentially come down to around maybe even 2585 or so, 2580. Back off that. But we haven't quite broken out above this swing high up here. We really want to get above this swing high to really start feeling good. It's around $30.35. We hit 29. What here? We hit 29 and 90 and a half cents. $29.90 and a half cents so far. So, yeah, silver gold ratio. I think silver is finally going to start catching up with gold a bit. But that's just one of those things that's just gotten so bad over the years. I think it might take a bit to really make any meaningful movement in it. But I think there's a good chance that we see that we do see that silver, catching up to gold a bit more. Because it's been, it's again, if we look at that silver chart, we talked about this before, right? It's just been so. Let me zoom out to the weekly here. I mean, there we go, right? But in reality, so this is when gold hit its all-time high, same area, 2011. But silver had just broken out above its all-time high here in February of 1980 when it did that, right? I don't think a lot of people look at that when they're looking at, at gold and comparing to gold, right? So gold, 2011 over here, right? But 1980, it was way down here. You see how gold was already, silver is kind of doing this area. You see this right here? That's kind of where silver is right now, with this right here. So kind of interestingly, if you look at that, silver, again, is just kind of doing this, and we're coming back up here now doing this. So, maybe we see something similar coming out of silver here, like we saw with gold. But since 2011, gold broke out here in 20, and then went sideways here, building this reaccumulation range for a few years, and then broke out here. So yeah. How do you maintain focus with so much opportunity? Yeah, it's a good question. Part of it's experience. So the one thing I remember when I first started trading was that I wanted to trade absolutely everything, and I wanted to trade all the time, and I wanted to be looking at charts 24/7 and doing all that. What I found is through the years is that I don't want to do that. And what you'll find is most people who've been in for 10 years or, more, they don't want to spend all day. Most of them don't want to spend all day trading. They just want to find some good opportunities, what look like the better opportunities, and get into it. And also the thing that contributes to that at first, when you first start, is that you've got all this, you want to be, you want to make money as quick as possible. I was the same way, almost 30 years ago when I started. And, but what you find, if you're lucky when you're trading, and you listen to people like me talking to you now and telling you, is that it's not a sprint, it's a marathon. And focus on learning the skill set. And if you can do that in proper risk management, if you can do that, it's going to pay off for the rest of your life. But you've got to get out of the impatience to want to get rich as quick as possible and do all these things that we all want to do when we first come in. And once you do that, then you kind of zoom out a bit and you start looking at a little bit longer term time frame charts, and you start noticing the opportunities, right? And you start looking at what's developing, and you start, especially with the stuff we teach, right? And you learn, listen, if you weren't already in from down here, right, you learn to get in here, or you learn to get in here because you understand what's going on in the range right here, right? And you start doing that. And you have to risk very little. You don't have to risk much at all. You can risk very little and get huge returns. And so you just start finding multiple charts like that. And all of a sudden your risk, like right now when you're starting out and you're trying to chase everything out there and you're trying to make as much money as quick as possible, right? Your risk is way up here on every trade, right? And then the multiples of the trades is way up here. But when you start learning how to trade and how to approach the markets like I teach it, your risk for each trade is here, and your risk overall is way down here. And you learn how to make that money finding good trades, and trusting them to play out rather than just trying to make as much money as possible, as quick as possible every single day. I'm not saying you can't be a day trader. Day trading is fine. You can use the skills that you learn at the Trading Academy, where I teach. You can learn those. Take those things and you can learn to trade them with the day trading. The biggest problem you guys are going to have on the day trading is your mindset, is your emotion, because you're still focused on the very large targets, right? You're like that troll Ray, right? Because I'm bullish in this range, because that's all it is a range on the time frame I'm looking at, right? Because I'm bullish on that, he can't see it because he's very emotional. He just sees this drop from 70 to 60. And he goes, oh my God, end of the world, right? But his emotions are way out there. Whereas my emotions are not out there, right? I understand what I'm looking at. I understand my time frame. When people are day trading, that's the thing that they unfortunately miss out on, is because they think about these larger targets rather than the targets that are appropriate for the time frame they're trading. If you're trading 5-minute time frames, you're not trying to get $1,000 or $2,000 movement. Okay. If you trade, if you're trading the hourly or the 4-hour, your movements are going to, your movements are going to be more than on your 5-minute or your 15-minute, but they're going to be smaller than on your daily or your weekly. And that's the hardest thing I think that I see most traders get to when they're trying to day trade, is they don't focus their appropriate targets for the time frame they're on. So hopefully that makes sense. What happens when smaller miners capitulate to the more centralized miners? What do you mean what happens? Are you thinking like nefariously? Like all of a sudden the big miners control, big percentage, blah, blah, blah kind of thing? Or what are you thinking there? Revi, you agree with what I was saying? Man, yeah, it is. Again, guys, I'm not here to blow smoke up your rear end. I've never been. 7 years I've been doing this. I've been the same way. Just try and give you the realities of trading and investing, right? Try to help you navigate through all the difficulties that you have that we do to ourselves. Most of the difficulties you guys are facing are to yourself, are because of yourself, because we're emotional, because we don't know what we're doing at first. And of course, because we come in like I did, trying to make as much money as quick as possible, thinking, oh man, yeah, just because I can get in the market, I can do this. And that isn't the way it is. Guys, the reality of it is well over 90% of traders enter the market and are back out. Most of them within the first 90 days. Everybody wants to do things on their own. I wanted to do it on my own at first. It wasn't until I got a mentor that I started, and I really made the decision and I made the decision to actually really focus and learn. It wasn't until those two things happened that I actually became profitable. We want to all do it by ourselves, but the reality of it is, guys, and and you're probably gonna say, oh, well, you're just selling something, so you're gonna say that, but no. The reality of it is that most people don't make it as traders. Like huge. Over 9 out of 10 don't make it as traders. Okay. And most of them try to do it on their own. And I think that's the big problem, because you don't know what you don't know when you're trading, right? Mark, see you in an hour, buddy. But yeah, what happens when smaller miners capitulate to more centralized powers? I mean, it just, hash rate, kind of just becomes more centralized. I mean, there's not, I don't know what else you want to say other than that. It's not going to affect the price any. I mean, the price is going to, continue to go up and whatnot. The most efficient miners are the ones that win, right? You guys, it's like any other business, right? You have to be efficient. You have to be, your processes have to be better than your competitor. And if they are, you're more likely to remain. But yeah, definitely Jim and Joe Jane aren't going to be, Jim, Joe, and Jane aren't going to be out there, mining profitably from their house, right? So, again, that's kind of what I'm looking at there, guys. We're still holding here. Still getting better pullback. We're starting to get some good pullback here on the Stochastic RSI on the 1 hour. We're neutral now. So yeah, I mean, as long as we can get above this wave 4 here, this latest swing high before where we're at here, right around 66,900. If we can get above there, we should be. I think we're probably good to go at a new all-time high. But again, we still need the confirmation, which is the breakout above this wave B up here, around 72,756. All right. Thoughts on Ethereum? Hey, Steve, I already went over that, buddy. I'll jump over here real quick and then I'll go. Yeah. I think we're just doing a wave 4 here. Looking for a breakout above 37.29 here, this swing high. So whatever it is, whatever chart you're looking at, it comes down, it pulls back, and it comes down. So that pullback, you want to get a breakout above that. And if we do it from where we're at, initial target is 51.44. So nothing's changed since I was talking about this 1-2 way back here, last year. Still looking for that 5,000 plus target and then continuing higher, initially, and continuing higher off that. If we do break down further though, I think we could look here at 25.45, maybe even 24.10 or so would be my targets if we were to break down further. But right now, I'm kind of leaning toward the idea we're going to rally up. So I want to see us push up and break out above that swing high to say, okay, let's head up there. Probably. Oh, it's a nice. Look, it's a nice, nice descending channel here. Yeah. If we can get an impulsive breakout above the EQ of the channel, target is the descending channel resistance. So basically, that daily pivot area. This is the 3-day, but daily pivot area there. We're building a bit of a range here locally. Yeah, so we just want to see some breakout. Yeah. If we can break out above the hourly pivot, that would be the first hint that we're probably headed up. So we'll say right around 32.81 or so. If we can pop out above that impulsively, suggest that we're headed up toward at least that next target there. Okay. Let me see here. All right, guys, listen. Let me see here. Okay, real quick here before I leave, one more thing here. Mr. Smith says, I was just thinking that people that feel they've missed out on the Bitcoin pricing can enter into large scale mining operations to get a piece of the pie, which makes me wonder if China and others, then secondary, those governments that decide to gain power over the large scale miners could inhibit progress if it is too centralized. I mean, yeah, I can't say that wouldn't happen. I don't know that I necessarily am worried about that at the moment here. Yeah, a lot would have to happen for that, to get that point. I'd have to think on a bit more. Yeah, I guess it's probably possible, but when I look at life and I look at trading, I look at probabilities and what's most probable, to happen, and I don't really see that as anything very probable to happen, but it is possible. Hope that makes sense. Okay. All right. Anyway, guys, listen, I really appreciate you guys being a part of this. Thank you so much for joining me, and give Juan a follow. Again, Singularity7X there on Twitter. You're going to like a lot of the stuff he posts, guys. This is, institution level research. And the Bitwise guys, I can't say enough, man. They are so out there willing to talk with you guys, answer questions. And they just put out so much ridiculous information, guys. So other than that, just remember, the only thing you control is how much you lose. So please keep working on that risk management day in and day out is the absolute most important thing you're going to do as a trader, okay? I hope you guys have an amazing day, a really great weekend. Again, follow me, hit the like button, subscribe to the channel if you're following me, Twitch or YouTube, or follow me on Facebook or Twitter, X, or whatever you're doing there. All right. You guys have a great week. You guys have a great weekend. Don't forget you can join us down below, and we'll see you guys next week. Take care.